You've got the L prospect potentially, but we don't see that because I think, the amount of monetary and fiscal stimulus that's been thrown at this problem suggests that, that won't be the case. I completely agree that, we've gone too far, too fast to be looking at a V-shaped recovery between now and the end of the year. Even if we do start to sort of edge towards sort of vaccine treatment and, the global macro picture looks a little bit more optimistic, I think people will be very hesitant about jumping in with both feet. So I agree it's going to be sort of an elongated U. I'm not quite sure what alphabet that would have to come from, but, we will see sort of an improving sentiment, I think, over the next couple of quarters, Q3, Q4. But, not only is it going to take many months to get SMEs, businesses, consumers, back feeling confident, it's going to take a huge amount, as we've seen already, $2 trillion from the Fed. It's going to take a huge amount of debt, which we're going to be paying off for generations. The UK has only just finished off paying its debt from the Second World War. And that was a fraction, that was 26 billion pounds, 12 billion pounds rather, a fraction of what we're talking about today.
So we might be paying off debt for generations, but in terms of economic recovery, look sort of how it feels in terms of people getting back to work, in terms of economic growth getting back to what you can call a normal level. How many months or maybe even years do you think the effects are going to be felt?
Oh, I think we're going to feel an improving sort of global growth sentiment coming through in the latter half of this year. I think we will see a rebounding growth, but perhaps, as I say, not V-shaped in 2021. The IMF numbers that came out earlier this week were talking about a 3% global recession this year and a 5.8% rebound, an 8.8% rebound to a plus 5.8% global growth next year. I think that might be a little bit optimistic. I think, but given once we've removed the coronavirus, which is it's a transitory constraint on market sentiment. Once you remove that, in the context of zero rates, loose fiscal policy, you're going to be in a much stronger position for risk assets to perform very nicely over the course of 2021, 2022.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.